Namaskar. This is Akhilesh Bhargav. Welcome to Tit-Bits on Business and Finance with me. As the coronavirus COVID-19 spreads across US, we are witnessing a lockdown of America as a nation. And with the closure of US, there's also closure of its economy in the offing. Sector after sector there are now trouble. Airlines, travel, hospitality, transport and logistics, consumer demand, they have all been showing a contraction such that in the last 2 months, the American economy has witnessed a contraction of 5% and the contraction of the American economy and the resultant closure of certain sectors and companies continues. Some experts estimate that the slowdown of the American economy in a negative territory will continue for at least 2 to 3 more quarters. And the question is, how many will survive it? Experts say that there is a profound, pervasive, and persistent closure in the economy across the board. American companies are struggling. They are struggling for consumer demand, and that's because people are staying indoors. The demand has gone down. Because of that, companies are cancelling production. Layoffs are taking place. There is suspension of production shifts, and in many cases, workers are being asked to stay at home. The temporary workers have already been suspended or sacked, and even the permanent workers are facing a similar crisis. There has been a sudden stoppage of cash for the American businesses. The cash in circulation, or the working capital cycle as we call it, is jammed. And what is badly needed by the companies to survive these tough times is, of course, cash. But then, if the economy is coming to a grinding halt, the working capital cycle, which feeds every company with cash, with funds, is also coming to a grinding halt. This collapse is expected to result in some kind of a recession in the American economy, which is something which the country fears the most. Because of this crisis, because of these kind of extraordinary, unfortunate developments, the US Federal Reserve Bank has gone in an overdrive mode. Recognizing the fact that what is needed is liquidity in the economy, the US Fed has already announced a stimulus of $700 billion. That's the amount they are pumping into the economy. Some say that the amount needed is going to be upwards of $1.5 trillion, and $700 billion will not be enough. A sector like the airline sector itself is estimated to need $50 to $100 billion for a bailout. But then it's not a bad start. The US Fed is pumping liquidity into the country, into the economy to ensure that businesses are not starved of cash and that they are able to meet their commitments, both in terms of expenses and also in terms of servicing their debt. The reality is that in order to ensure that these funds are actually picked up by the business sector, the US Fed has further ensured that interest rates today there are at a near zero. What is needed to be seen is how many companies will be able to really avail of this additional money being pumped into the economy, because all those who want to survive, all those who will survive only because they had money available to meet their commitments. Taking a cue from the US, the EU Central Bank is also pumping in 750 billion euros, which is about $818 billion into the European economy, which today has been struggling with the kind of crisis that we are seeing in countries like Italy, France, Spain, etc. Thus, there is a financial lockdown taking place. With cash suddenly becoming so scarce, with the funding cycle stopping, the reality is, forget the lockdown of the country. The real lockdown that is bothering the nation, the economy, is the financial lockdown. And India is in a similar boat. So, like in the case of the American economy, the Indian businesses are also witnessing a sudden stoppage of cash flows. Working capital cycles are coming to a grinding halt. The biggest victim of coronavirus is actually the cash flow cycles of businesses. How do you run your business if your cash flow cycle is stuck? If you have to receive money from somebody and he's not able to give it to you, how do you meet your expenditures? How do you meet your payments towards workers, staff, salaries, etc.? How do you repay your loans? How do you repay interest? How do you basically keep the business running? Cash is where the biggest weak point of any business is. And if that is where you take a hit, the business is going to be suspended or it might even stop. Before the coronavirus came into India also, we were already witnessing a slowdown in the Indian economy. Our economy was anyway on a weak wicket. We were anyway witnessing a slowdown in consumer demand. We were witnessing bank NBFC sectors in such a crisis that lending by these sectors, which pumped money into the economy, had receded significantly. Thus, at a time when the economy was anyway struggling, we now have the double whammy of the coronavirus, because of which the country is also facing a financial lockdown. The country is also facing a lockdown. We need to keep our citizens indoors to ensure that the spread of the virus is contained. But in that process, businesses are taking a huge hit. The sectors that have been already impacted are hospitality, airlines, transport and logistics, restaurants, exporters, event management companies, marriages, social events, real estate companies, and of course, the stock markets. We have seen the kind of bloodbath that the stock markets have witnessed in the last few days. And with even stock prices now being at virtual historic lows, there is poor liquidity into the system. Even if an entrepreneur has got reserves which are parked in real estate or stocks, he is not going to be able to exit out of it. He is going to suffer for want of liquidity. We are seeing a situation where not only is the business working capital cycle inherently stuck, but wherever the cash reserves of the business were parked in assets like stocks, securities, mutual fund units, or even real estate, they are finding it difficult to liquidate them and improve their liquidity. What the country needs is liquidity, is cash. We are also in a financial lockdown mode already. And that is the start of the next 3 months, which we think are the most challenging for any business, any enterprise in the country, especially if it is an MSME enterprise. The bigger ones probably have institutional avenues to raise funds to tide over the crisis, but the MSME sector does not have this. And that's what comes to what India also needs. India also needs some kind of a fiscal stimulus, the way the Federal Reserve Bank has done for the US. The RBI also needs to do that. The RBI will need to pump money into the economy. Those enterprises that need money, which are being affected by the coronavirus crisis, and because of this kind of crisis, they are facing a default on their debt repayments. They are facing a default on their interest repayments. All these enterprises are going to be in need of help by way of liquidity. Before we come to that, there is another problem that we have. The problem that we have is what Mr. Raghuram Rajan calls a broken pipe. The Reserve Bank may want to pump money from the top of the pipe, but it never reaches the bottom. The entire credit delivery system in the country today is broken. It needs to be fixed. And that is why what we have seen is that whenever the MPC has cut interest rates and it thought that demand for credit is going to pick up, it never did pick up. It never reaches those who need it, even if policy decisions are taken. So coming back, we also need a stimulus. We need a fiscal stimulus such that money is pumped into the economy. Money needs to be pumped in either by waiving the repayment obligations for, let's say, the next 2 quarters, such that companies who are required to repay loans are not considered to be in default. They don't take a hit on their cash flows. So either you need to forego the repayment of installments of loans, etc., for 2 quarters so that the cash flow cycles of companies don't take a hit and they're able to use the money for other needed purposes. Or you need to give them emergency loans commensurate with the kind of businesses they have or the kind of industries they are into. The second is, as we had said earlier, Reserve Bank needs to come out with new norms to define what is an NPA. It will need to be liberal. If there is a default for 90 days and it's considered to be an NPA, it will have to be extended by the Reserve Bank of India so that enterprises do not get the tag of being an NPA and banks also don't take a hit by virtue of the fact that they will need to then provide for the new NPAs that are coming in the system. So, pump in money, delay calling any kind of a unpaid debt as an NPA, and certainly ensure that liquidity is available as and when needed. The government will also need to get into fiscal pump priming. It will need to spend more. It will need to spend more so that businesses generated by the institutions, particularly at a time when the ordinary individual consumer is not able to spend, and that will ensure that the wheels are churning. Cash flow cycles in India are also coming to a halt. And as we said, the next 3 months are certainly going to be crucial. And for that, it being such extraordinary times, it is the government which will need to take extraordinary measures. And they will have to be in terms of putting money into the economy. And if that is not done, expect business closures, expect job losses, expect defaults in loans, and expect bank balance sheets and NBFC balance sheets to become only more weaker. This is Akhilesh Bhargav signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.